you want me to go ahead and start, or do you want me to wait a minute? Okay, I'll just start. So hi everyone, I'm Andrea Colline and I work at Consumer Credit Counseling Service of Rochester. And we're here today to do our presentation on managing student loans, as well as just, forming some good solid spending plans and habits. The first thing we want to say is just thank you so much for taking the time to attend today. Thank you so much to Parma Public Library for organizing this. And I'm just glad that we can be here to support the needs of our community and answer any questions that we're able to tonight. So a little bit about our organization. We have been around since 1970, so we have been in the Rochester area for 50 years, and we're very proud to be the only locally based nonprofit credit counseling agency in the Rochester area. Our mission is to focus on the financial health of individuals and families, helping those that we serve to achieve financial wellness through the programs and services that we offer. We are a member agency of the National Foundation for Credit Counseling. We're also licensed by the New York State Department of Financial Services, as well as a HUD-approved housing counseling agency. And we're also a member of the Better Business Bureau with an A+ rating. So I will be your presenter tonight. My name is Andrea Colline. There is my title and my email, so please feel free to send me any if you have an email or questions or anything that we can. Also, Pamela and Stacy, they won't be in tonight, but they also are counselors that deal with this and deal with all kinds of issues when it comes to managing debt. They were in our last presentation, so I still have their contact information up. So we're going to talk a little bit about loan basics, repayment basics, managing loans, CARES Act updates, as well as having a financial plan, and how to get connected to help if you need support managing expenses, debts, or anything of that matter. And then we'll leave a little time for questions. So we have an hour, but I'll probably go about 40 to 45 minutes to present, and then we'll save some time to see if we have questions after that. So let's just start with the basics. Some of this you might already know, but I think it's important to cover it right from the get-go. So when it comes to student loans, we have two types. We have our federal, which are basically government funded, and then we have private, which is usually like through a bank or a private lending entity. The big difference is with federal, there's a lot more repayment options. There's deferments, forbearances, loan forgiveness, things like that. Some of them are subsidized, meaning that you don't pay interest until you're actually repaying the loan, so it's not accumulating, depending on the type of loan it is. And then there's also private. So private, like I said, is usually through a private entity, lending institution, bank, credit union in some cases. There's not as many repayment options because there doesn't need to be when it comes to these type of loans. It's more of a government overview, our mandate, and they're not subsidized. So they would, even though you're not required to pay while you're in school, it would still start to accumulate interest immediately. For more information, I'll trickle this website right through the whole presentation. We have studentaid.ed.gov. So if it's subsidized, that's what I kind of just said. There's no interest while you're half-time. If it's unsubsidized, that means interest is charged on the loan. Subsidized also, there are more repayment options. And it could be dischargeable with an undue hardship as well as an unsubsidized, but the limits can vary. And that means basically, which is very far and few between, but meaning that, say someone has a federal student loan and there was a situation, like a very severe situation that disallowed them from doing the type of work that they were being educated for and have the debts for, maybe an accident or something like that, depending on the situation. And then the loans are basically forgiven, meaning that you don't have to repay them. I've been working in the industry for over 20 years, and I think I've only seen a handful of situations where that's happened. I'm not saying it can't, but I just kind of want to let you know where the difference is. But whether it's subsidized or unsubsidized, if that's a true scenario and it's approved, it doesn't matter. It will be approved for either one, but those are government. So PLUS loans and Perkins loans, I don't think they don't really do Perkins loans anymore, but people still may have Perkins loans. So basically a PLUS loan is more for like after you graduate. So if you're planning on going to, get a master's program or something like that, interest is charged And basically the max is the cost of attending versus like your financial assistance. While a Perkins loan is based more on like financial need, and the school can act as the lender, and it's got a very low interest rate. It can also be, plus loans are also for parents. So maybe there is a parent that's taken on a loan for their child to go to school. That would also be a plus loan. So those are usually, I mean, they follow a lot of the same rules as far as government loans go, but usually the interest would start to accumulate right away. So when people are obtaining these, we probably have already went past this part, but we would fill out the FAFSA. And anybody who is going to college that's going to be getting in, unless they're paying cash, and even if they are, would want to start out with the free application for federal student aid. So this is an application that will ask us all of our personal information, ask us about our income, our household income, parents' income, all of that. And the purpose is it's like the starting point to figure out what you could get approved for when it comes to grants or scholarships or anything, or just financial aid in general. So unsubsidized and subsidized loans are for undergraduates, low income or unable to afford like higher education. Needs-based, generous repayment options, as well as loan interest rates. If it's credit-based, it's more for parents plus, for undergraduates, or it's a plus loan for a graduate. So needs-based means affordability. They don't look at your credit or anything like that. They look at your income, savings, things of that nature. And there's some options there. If it's credit-based, it's more like if you're finishing school and you're getting a master's degree, or your parent taking out a plus loan, that's more where they would look at your credit for a credit-based loan. The rates are still low. It's just got some different terms. So usually we would work with a loan servicing company. So while we're in school, again, not required to make those payments, but once we're done, usually within 6 months, we would start to have the payments be due. Well, not now, but typically, which we'll talk about all that good stuff too. But a servicer is basically a company that is hired to do all of the maintenance on the loan, to send out the bills, to monitor payments, all of that. And there's only a handful. They're not jumping. I want to say like Nelnet is one. Oh my gosh, they're not jumping at me right now. U.S. Department of Education. So there's a good handful of different servicing agents, but they, like I said, they manage your payments and your billing. They manage your repayment plans, forbearances and deferments, loan consolidations, and they would typically be utilized for the government loans. So the National Student Loan Data System is the system where anyone who is graduating who has these type of debts, you can locate these. They will notify the servicers of your graduation, withdrawal, dropping below half time, anything that would make those loans due and payable, or any changes. So they kind of oversee everything. And then there's a handful of different servicing agents. So the benefits of a federal student loan, as we probably know, is it's typically low interest, and there's multiple repayment options. So you have standard, graduated, extended, income-based, and consolidation. And it depends on the type of loan that falls under that category. But with federal loans, there are usually a lot of different payment options. And right now, we'll just say it, we know that we're not required to make any payments for our federal student loans, possibly the private loans, and they're not receiving any interest, and payments are not due until the end of September. So I might as well just say the beginning of October, because it's September 30th of this year as to when this expires. So it's been extended. It was initially put out there for 6 months, and then extended 6 months again, and then 6 more months, I think. So it's been almost a year and a half of putting these loans into a, I don't know if the official term would be forbearance, but they're not qualified. You don't have to make payments right now but you still can if you want to, but you're not necessarily required. So the different payments. So a standard payment is standard. It's basically based on your interest rate and what you owe, and it's based upon a 10-year repayment period, so 120 months. So it starts if you don't go full-time right? So say you're going full-time and you drop to half-time, those loans become due typically within 6 months or 6 months after you graduate. So it's 120 months, 10 years, payments are fixed. So if you have, say, $28,000 in student loan debt, you'd have about, say, 5% interest. Your payments might be $297 a month. And then after the full 10 years, you'd end up paying about $35,000. Remember, that's with all of the interest. That's if you pay for the full 10-year period. So if you have a graduated payment, it's a little bit different. It lowers your payments that increase every 2 years. So payments are still made up to the same 10-year period. And between 10 and 30 years for consolidation loans. And an example would be that same $28,000, 5% interest. You would start off maybe at $150 and then it would go up to $200 and it would continue depending on your, the graduated payments continuously go up. So, but you still pay out that same amount. So I think it's a little bit, no, it's the same thing. You'd still pay out the same amount of money within that 10-year time frame. Now, extended can extend it to 25 years. So it's a little bit different. It's for fixed or graduated payments. So you can do either option, but this is, you have to have more than $30,000 in student loan debt, which isn't hard to do. And the example would be about $30,000 at that same 5% interest rate. So the payments would be $175, but it would be over 300 months. The downside, as you could see, is that you'd end up paying a tremendous amount of interest over time. Though the percentage is the same because the payments are lower over a longer period of time, people pay more. Sometimes people are forced into this option though because they can't maintain the payments. So I know that Congress is working on, and I don't know the details. I want to know the details, but some sort of forgiveness plan or program. I know this has been said before, but I truly think something will come of this. So hopefully, I think they're considering waiving or forgiving maybe a portion of the debt, depending on, I don't know if it's a percentage or up to a dollar amount. So hopefully things will pan through and it'll be very helpful to the borrowers because people owe money in student loans. It's not uncommon. An income-based is probably the most popular plan right now that we see. So it's basically pay as you earn is one option, and that's 10% of your discretionary income. So whatever you have left to pay toward it. So the way they would figure it is your gross income and then any debts that you have on your credit report. And then 10% of that would be, whatever's left would be your payment. So say, if somebody was making a gross of say $3,000 a month and they had $1,500 of obligatory payments, so their mortgage or their car loans or things like that, so they had $1,500 left, it would be 10% of that. So the payment would be about $150 a month in that scenario. If it's income-based, it's a little bit higher. So pay as you earn and income-based are a little different. It could go up to 15%. If it's income contingent, it could go up to 20%. And if it's income sensitive, payment changes annually with your income, which this one right here is typically the one we see most people doing. So you have to submit your income every year so they can kind of see where you stand. And then your payments are based on what's affordable for you and on that amount. So here again, it's kind of a, it's the same kind of an idea. 28,000, 5% interest, 150 per month, and then 200, kind of like that graduated, but it really depends upon your income. But if it's still paid within that 10 years, you still pay out the same amount. Okay, as long as all of the other factors fall within that same time frame. Now, if you consolidate for federal loans, they're eligible to consolidate after you graduate, after you graduate, leave school, or drop below half-time enrollments. So consolidation just means we're putting them all together under one loan. So at least one loan in grace period or repayment might be a little easier to manage. Fixed rate is based on the weighted average, and you can apply for consolidation at studentloan.gov. So that's something that you want to kind of understand, depending. Most people will tend to consolidate after they graduate so they can have that one payment. The interest rate really just depends on where the interest rates are. So I think the average rate is, I want to say 5 or 6%. It could be a little higher now, but about that. Well, right now it's nothing, but. And then private loans are different. Private loans, it's really based on the lender. I've seen pretty low interest rates for them too. and they're usually within that 10-year period. The thing about private loans that are a challenge is that they don't usually have as many repayment options. I've heard that's changing. Some lenders might be offering some guidance or support during these times, but it really just depends. It's not overseen by the government, so they can make their own rules. But you want to avoid, I think we probably know this, but I'm just going to put it out there. Avoid consolidating federal loans into private. Sometimes, I guess it depends. Sometimes it makes sense, but so there's a lot of private lenders out there when it comes to student loans. And a lot of times I've seen it, and it's not always the case, but I've seen people do it because the interest rate might be lower, and it might make sense to do it at that time. It just really depends on what you foresee as far as your income situation, your living situation. Are we going to feel comfortable enough maintaining payments? Because once we consolidate, all of those like repayment options are not included if we move it to a private loan. So when we're managing these loans, so after we graduate, within 6 months they become due. So you want to know your yearly income, right? So because it helps you determine that repayment amount, figuring out like what your goals are going to be. And it's hard. Are we going to go back to school? Are we going to immediately start work? Am I going to like look into relocating? Do I not know? So those are just things to consider. When it comes to long-term affordability, we want to really think about, where we're going to be, but also when there's changes in the household that can impact our affordability and as far as repayments. If we're not working, if we're married with spouse working, that can all and I hate this because I feel like there's no right answer for this but if someone's in an income-based repayment plan and they're filing their taxes together and it brings up that income, that can also impact your payments, of course, because I'm sure there's a lot of people file their taxes married but separate for that purpose, but it all really depends. That's more of an advice of like a tax professional, but those are kind of things that could impact your affordability. So when we're making these decisions, you just want to think about that. Higher paying job, if I make more money, I might have to pay more money. I will have to pay more money. Working for a public service, we'll talk a little bit about that. There is public service loan forgiveness programs. So with these programs, basically what it does is it covers, it's only for federal loans. It's only for direct student loans. It's not for like any loans originated by a bank or no private loans. So FFEL or no private lenders. So this is typically for our federal loans, and it has to be in some kind of income-driven repayment. The term income-driven repayment, it means that income sensitive, pay as you earn, income contingent, right? There's all those different, I think there's like 5 categories under that, but it has to be, it can't be in a standard payment or a graduated payment. It has to be in one of those options. So once we're involved in that, the way it would work is that as long as I make 120 qualifying payments, it would count. Like, so say I had, how do I explain this? First of all, let me just back it up. This started in 2007. So the first batch of loans were forgiven in 2017, and it's not a perfect system. There's lots of glitches to where you say you missed a payment, you have to make this many payments or things like that. If you go into default, it starts everything all over again as well. So that would mean we'd have to make 120 qualified payments if we're in this program. It's not something that's automatic either. You have to work for a qualified employer, like a nonprofit. I'll give you some examples. A nonprofit or certain sectors or things like that. And you have to actually enroll in this program. If you're not enrolled in it officially, you're not in it. And I can't tell you how many times people think that they're officially enrolled in a public service loan program and they're not. So we really want to make sure of that, get some kind of documentation indicating that, some contact information to make sure that you're truly enrolled. And then the way it's designed to work is that you still pay for your 10 years. You pay 120 payments, and then even if the payments are zero in some circumstances, or they could be $25 a month, if someone has $30,000 in student loans or more, or wherever it could land, of course, it's not going to pay it off. But whatever's the way it's designed to work is that it's forgiven. So even if I make 120 payments of $50, because that's what my income-based repayment plan was, and I have $20,000 left, that's supposed to be forgiven as long as we followed all the rules. We didn't default, we kept track of our payments, and all of that. And the good news is that we've been told that, not that we've been told, it's kind of everywhere, that right now with these payments on hold, that's counting toward this. You're not going to lose the public service forgiveness program. If you're enrolled in that program and, you know, the payments have been zero with 0% interest, that's still, you still gained however many months it was. So what is it, 18 months or whatnot into that plan. Okay. So, but if the default is officially, default and delinquency are two different things. So delinquency, I believe, would be reported up to, sometimes it could be as soon as 30 days, depending on the type of loan you have, but I think it's like 60 to 90 days. Default means that like you just haven't paid, or there's been no communication after about 270 days. And if it's a federal loan, definitely would not recommend that. Of course, somebody wants to go through that, because it's even if you made 119 qualifying payments, if you went into default after that, which probably wouldn't happen, it wouldn't count. So you want to make sure that we're on track with these. It also remains on hold if we are back in school in a deferment there as well. So the kind of agencies or employers are like a government agency, a tribal entity, military jobs, or qualified nonprofit like schools, charitable, civil service, those type of jobs. And you have to have 10 years in. You don't have to stay with the same employer. If you go from like a nonprofit to a nonprofit or qualified agency to qualified agency, then you would, it would still count. You mean, you have to let them know, you have to update your income and your information. You want to stay in clear communication with them and keep track of that communication as well. Again, and here's the website. Another thing too, is if you left, oh, that's what it looks like. Can log in. Is that if you switch jobs and you go to a for-profit agency, you won't lose the time that you've put in. So say I was at a qualified agency for 5 years and I'm still in this plan, but I switched jobs for 2-3 years and then I go back to it again. You can pick up right where you left off. So it's not going to be forgiven if you work for an organization that's not under that umbrella. But if you decide to go back to that type of work or that type of field, or just a qualified employer, I should say, it will pick up where it left off again. Okay. Sometimes it's a hard decision, because you're like, it's a really hard decision, because it's like, do I take a higher income? My payment's going to go up, or do I stay in this field? So there's a lot to think about, but if you have the correct knowledge, to make those decisions, it could really be helpful. So every 12 months, you have to update your information at that same website, federalstudentaid.gov. That's an active website, tons of materials, tons of information and education about everything, especially what's going on now. So that might be something good to kind of look into. So that is where, let me just take a time check here. That is where what it would look like. If you don't have a PIN, you can apply for one at this website. Usually you have to have some kind of a PIN to have access to look at your loans. You should be able to go in there at any point in time and see where you stand. You should be getting correspondence. You can look at your credit report to kind of see where things are falling right now. I definitely would, by the way, if you haven't looked at your credit report since this whole pandemic started, I definitely would keep an eye on it to if you're in a forbearance or deferment or whatnot. I want to say it's officially a forbearance. They should be reporting it. It should not have any negative impact upon your credit report, but you definitely want to make sure that's the case. So it wouldn't be a bad idea to look at it. And then the other side of things is that there's a ton. I don't even like thinking about it, but there's so much fraudulent activity that's going on. There's a lot of scams. So whether it's, I guess the big thing right now, number one on the Better Business Bureau track is like utility scams, where they're calling and saying, your services are going to be shut off. We need some type of payments. And they're trying to get people to make a payment simply so they can get their bank account information. So there's that. There's a lot of like deliveries. People are ordering things online like crazy, even though, I mean, of course we are, because the things that we need, we might not want to go out as much, or definitely over the past year, but a lot of people are ordering things from like websites that might not be the best, or they're not getting their items. So there's a lot of scams, there's a lot of fraud, and a lot of it has to do with our credit. So just make sure no one's opened up any debt in your name, and then you want to make sure these student loans are reporting as current. So federalstudentaid.gov, you can monitor them on your credit report, but it's good to kind of monitor things on your statements as well and keep track of all that good stuff. All right. So should I take time for any questions? Anybody have any questions? No? Okay. All right. You can always put it in the chat, or you can ask out loud. Did you have one, Grace?
No, yeah, just not seeing anybody. We're always absorbing information. We haven't really been talking when we've done these so far.
There's a lot with this one, and there's still stuff we're learning. You know, we just have to kind of take it step by step, because things are they're in like rapid movement all the time. All right, so CARES Act updates. So CARES Act are basically all of the different programs that people are utilizing for, you know, their mortgages or their student loans or whatnot that have been created since COVID started. So I'm sorry, I didn't update this, I apologize. But federal student loans, the forbearance is until September 30th of 2021. I apologize. September 30th of 2021. It was initially July, I believe it was 6 months. Then it got pushed out to October and then December. And then like honestly on like December 30th, I think they announced it was, or even right before it expires, they let people know, oh, by the way, you know, we're going to extend it. So we'll see, you know, hopefully that's something that can help people out. So no interest. You should not be getting any interest at this point if your loan qualifies. All collection of student loan debt has stopped. All collection. So even if you're really behind on it, you can still make payments though. You can still get current, you know, if it's something that had impacted your credit previously, you can still work with them. I have heard that it's more of a hassle to get on track and make payments than it is to just simply accept the deferments or forbearance. I keep calling it a deferment, but it's truly a forbearance. But you still can. Some people are making additional payments while there's no interest. But a lot of people, I think, are taking that money and spending it. No, I'm just kidding. Hopefully they're saving it or paying down some other debt. I know a lot of people who have gotten ahead on other bills and other debts during this time. I mean, of course, it has not been the most fun. It's been a horrifying year. It's been scary and overwhelming. And there's been lots of changes with income. A lot of people have lost their jobs over this. You know, it's really overwhelming. But some people, though, haven't. You know, if they're still working, or even if they had lost their job and they're receiving like that subsidy with unemployment, between that and then having student loans on hold, if we're really, you know, planning things out, some people are able to establish a savings, just an emergency savings, or maybe pay down some debts, or maybe use that money to like stay, you know, keep their payments current, things like that. A bird just flew in my window. That was fun, sorry. So all that good stuff, right? So just trying to keep things in order. So all collection of student loans debt has stopped, and check credit report to be sure deferments are being reported, just as I stated, and then annualcreditreport.gov. So that's the official place that you should be looking at or going to kind of view things, to make sure that, you know, you can see where everything is. If you're enrolled in the Public Service Loan Forgiveness, officially enrolled, all payments from forbearance count towards your 120 payments for forgiveness. I know I mentioned that, but I mean, this is really a big deal. because this is something that can really be beneficial during this time. And who knows what's going to happen at the end of this. I mean, like I said, for years, I mean, there's been a lot of updates and there's been a lot of, you know, guidance and support with student loans. But at the same time, it's like the people, I mean, I know there's different age groups and whatnot, but a lot of people that I know that are probably in their, you know, that I've worked with over the years in their, you know, 30s, 40s and whatnot, even 20s, they don't have a lot of credit card debt. There's more people with an abundance of student loans. Like the average student loan debt is at least about $40,000. And there's about 5.9% of people have like over 50. And then there's a good percentage of people that have over 100,000. I mean, I know a lot of people that do. I mean, they might be going to work, you know, that's going to support that and have an income that's going to support that. And that's all good and that's fine. But I just think that, I just hope that there's something done, I guess is what I'm getting at. I know this is definitely helpful, but hopefully there's more help to come when it comes to managing these loans, because they can be really overwhelming. So even when people are trying to get approved for a mortgage loan, even if your payments are zero right now and you're working and all that, the loan company or the loan officer has to take a percentage typically of whatever your loan balance is. So it can make it sometimes, you know, if someone owes $100,000 and they take 1%, that's $1,000 that they have to count toward those monthly payments. So depending on the type of loan that you get. So sometimes it can make it challenging. So you're better off in once the payments are back on track again, in some kind of repayment plan at a lower amount. But these payments count. So I'm glad to hear that, because that'll help people to, you know, get that extra year in at least. If you're in a rehabilitation, so a rehabilitation program is like catching up on old debts, maybe loans that went into default. I should say that we're say, okay, they're in default. I need to get current. I'm making payments. I'm working my way through it. Even though those are on hold right now too, but payments not being made are still counted towards rehab. All wage garnishments for federal student loans are done. So that's another good thing. We've met lots of people who were having student loan garnished. So basically, if a student loan goes in default far enough, you know, there's not a specific time frame, but over 270 days or more, you know, they could actually, if there's a judgment out there, they could garnish your wages. And it could be more, it's typically 10%, but I think it could go up to about 15% for federal debts. So we got to kind of have an eye out for that if they're in default, but right now they can't even do garnishments. Okay, so if someone was having their wages garnishments, it's a good time to try to get current on these. You still can. You might have to jump through a few loopholes and make sure that, you know, we know who we're contacting, but definitely something that is an option. And then here's some commonly asked questions. If you want to, here, let me do this. I was going to pop this. Oops. I'm going to pop this in the chat. So if you have questions that you're curious about and you want to look at it a little bit, they might get answered right in here. So when it just comes to managing our financial picture, it's important to know where we stand. If we do have additional funds because we're not making monthly payments, make a plan quick. Because even if we have an extra $300 or $400 available, an extra $300 or $400 a month is a lot and a little at the same time. It's a lot if we utilize it correctly. It's a little if we let it fizzle away. And it's so easy to do that. Right now, we know there's changes in income. People are receiving unemployment. They might have additional daycare expenses that they weren't anticipating. There's all kinds of things that can throw things off. But if we are in a situation to where now those student loans, we're not making payments, we know we're gonna need to get back on track and have a plan, but have a plan for those funds. Am I still gonna put it toward those loans while they're in 0% interest? Am I gonna pay off some credit card debt? Am I going to save it for an emergency? What is my plan? Beware of spending. So I don't know, this is just the credit counselor side of things, but it's very easy to have a false sense of security, especially right now. I know everyone's in different situations and I don't want to categorize everyone in the same situation, but I know there's a lot of people who actually have more money available or more discretionary income because of things like the student loans being lifted. Or maybe if they're working from home, there's less transportation expenses or daycare expenses. It can go either way. But with that being said, we don't want to give ourselves that false sense of security and spend without thinking. It's so important to really have a plan right now. If anything can prove it, it's the situation. You know, not having an emergency savings or depending on credit, or not having an emergency savings and not being able to depend on credit, right? We want to make sure that we're looking at things, and that's something we can help you with. If someone's overwhelmed with their debts or their budget, or they just need that support to get, you know, on track, we can definitely offer our guidance. It's natural to spend more if we have more. It is, it really is, especially with that additional layer of stress. When we're stressed, stress is an emotion, right? And we can spend more money. I mean, how easy is it to just buy something online or have something delivered? That's just the kind of culture we're living in right now. So all I'm saying is is just be aware, you know, of where our money's going and make a plan for it. Our brain might tell us it's okay to spend more, but it may or may not be. So have a plan for any additional funds. Like I said, the emergency fund, pay down other debts, pay more on your student loans. Have a plan for any additional funds from free monthly payments. Like if we need to manage our private loans, put more money into retirement. You know, it might be not a bad time to do that, depending on our situation. Or pay down collection accounts or clear up your credit. So if people do need that support, or they do need to get connected, at Consumer Credit, we are available. We're working, now the office is closed to the public. The office is closed to the public, but we are here. We're operating either over the phone or video calls. So if someone's just struggling through, or maybe not just struggling, but maybe there's some debt they want to resolve, we're definitely here Monday through Thursday from 8 a.m. until 8 p.m. and then Fridays from 8 till 5. So the services that we offer at Consumer Credit Counseling, we offer budget and credit counseling to help people kind of organize their debt and figure out what they can do to resolve it in conjunction with managing their budget. We also have a debt management program, which is very popular, very helpful, that takes the unsecured debt or the collection accounts, not student loans or mortgages or car loans or anything like that, but it takes the other type of debts, and say we're struggling making payments with those. It can help you to consolidate your payments, reduce your interest rates, and also to help you to get current so we don't continuously receive a late or over limit fee. It could also be used for like old collection debts. So maybe it's the time to clean up our credit, and if I have a consolidated plan, it might make it easier for me to do that. We also have first-time home buyer education, and we also obviously offer budget and credit counseling, but that is a component. There are grants that people can obtain to help them to purchase their first home. The market is really challenging right now, but the best thing we can do is to educate ourselves about what's available, educate ourselves about the process. So keep an eye out too on our website at CCCS of Rochester. I just put a bunch of different workshops out there for May and June. Some of them are about exploring homeownership. I think I have this one on there too, if you want to hear it again. All different ones, right? Cleaning up credit, managing a budget, avoiding scams, all that. So visit that. But the first time home buyer, we're doing one, I think, in about 2 weeks about the different grants and programs out there. So keep an eye out. But one component is an educational workshop, and that's offered online. And if there's a $40 fee for that, you get a certificate of completion, which is required by many of these different grant programs, and we can supply that to you. We also offer reverse mortgage and bankruptcy counseling, which is services that people look into if they are, it went away, are looking into maintaining those services or utilizing those services. So it's not that, we give out loans or anything like that, because we don't, but there are certain requirements prior to obtaining, filing bankruptcy or obtaining a reverse mortgage, to really educate someone to help them make an informed decision. So sessions are booked for an hour. We look at your goals, we look at your budget, we look at your debt, and we develop an action plan. And we just help craft solutions to help you meet your financial goals. And after the counseling session, the worst case situation is you feel more organized and in control. And then a newer service that we have. So we've been doing this, I want to say it's been about like a year and a half. And what financial empowerment counseling and centers are where there's financial counselors that are built into different agencies throughout the city of Rochester. This is a partnership with the city of Rochester, and it was funded for the city of financial empowerment. So it's a completely grant-funded program, completely free service. But this is like if people need ongoing counseling. They need ongoing counseling, financial counseling, I should say. So it's not necessarily, I mean, people might be facing debt. Maybe they are trying to clear up their credit, but maybe they don't have a ton of that. Maybe they just want to develop better habits when it comes to spending or saving, or maybe there's concerns that they're having with managing their credit or goals that they're trying to reach. And you'd have like your own financial counselor. A lot of them, people that have student loans that are trying to figure out, all right, I got to put a plan together and here's what I want. You know, and then you just visit, you develop your plan and you visit each step along the way and you meet with your counselor. So like I said, I know that they're seeing a lot of student loan questions and fraud, you know, people having fraud on their credit report, but a lot of people just want that support. They want that accountability, and we're very busy. So feel free to touch base. There's the website. This is a great, I mean, I can't even tell you how I love this program so much, and I'm very happy we can offer it. So if people need to get connected, you can always reach out to us. We don't do one-on-one student loan counseling. I will say that we used to. It's not really a big need right now, but I mean, because things are in deferment, it will be a need soon. But you know, if you still have other debt and you're trying to figure out what to do with it and what's your best avenue to resolve this, you can always do a session. I mean, we're well versed enough to where we can discuss some options, you know, with student loans, or try to figure out where you stand, and answer some general questions, or at least point you in the right direction. But definitely, if someone's overwhelmed with debt, if they're behind on a mortgage, that's another thing. I'm sorry I didn't have my slide put in here, but there are there's all kinds of options. There's foreclosure prevention counseling and services to really help someone if they are in a deferment or they're in a forbearance and they haven't paid their mortgage. There are a lot of options that can really help you to avoid foreclosure and most likely stay in the house. But navigating those on your own is very, very, very challenging. I don't think people are really worried just yet, because I believe until the end of June, everything's like in a moratorium. I mean, I know it's all in a moratorium, but I believe it's June 30th, the last time I checked. So meaning they're not going to foreclose on your home. Evictions aren't really happening. I mean, they could, but they're not really happening, but definitely not foreclosures. So if someone's in a situation where they're trying to figure out, like, what do I do? You know, what do I do? How do I stay in this house? I'm overwhelmed. Our agency is an agency that can help support that. We can definitely connect someone with a housing counseling session to help educate them about the needs. All right, I could take any questions. I'll answer them to the best of my ability. Are there any questions we have? I'm a little early, I'm sorry, but I said 45 minutes, but 7:16 is the time.
Yeah, please feel free to unmute yourself, or if you don't have a microphone on your computer, type it into chat. I'll give that a minute, and then I do want to just mention something at the end as well.
I'll also pop my email in, so if you have a question that you want to email me, and you can do it too. So my email is also in the chat, as well as the link to the studentaid.gov.
Anybody?
I think they do.
Yeah, let me just mention, Andrea is doing one more event for us May 12th. That's a Wednesday. It will actually be during the day at 2 p.m. and it will be in person. So we are excited. I'm excited to have people in the library. but that will still be, you know, safely distanced with masks in the library. But Andrea will be presenting on protecting your personal information. So if you are interested in that, that is already on our library events calendar. So you can sign up for that. And that, as I said, is Wednesday, May 12th. And as I mentioned at the beginning, I'll also send up a follow-up email and a feedback form for everyone.
Yeah. I also have an evaluation. Doesn't look like the link. I know it works. If I'll put it in the chat, it would be helpful. It's just a few quick questions.
Okay.
And if people do want to get connected, it just allows them the opportunity to do that. I don't know if it's gonna. Oh, I don't think it's gonna work. No. I can say. Is it okay, Grace, if I send the link to you?
Oh, sure. Yeah,
No?
I can put that in my follow-up email. Absolutely.
If I click it, I could probably get the link. But it's probably just as easy to send it out in one email. Okay. So, all right.
Well, yes, if there's nothing else, then thank you everyone for being here. And you'll be hearing from me, and you can always contact Andrea directly with any specific questions. And thank you for joining us tonight. I was recording, as I said, so this will get sent out to you as well. Even though you were here, you can always share it with people who you know that might be interested in the information.
And then they'll know a bird flew into my window, and that was fun. I'm like, I'm recording. No. But it was okay.
All right. Well, thank you, everyone. And you'll be hearing from me. And I hope you have a good night. And thank you.
Right. Well, thank you. Have a great day. Thank you. Bye.
Bye.